And welcome back, everybody. Now, I know I'm hoping that we're not blowing out my audio here, and I hope that this is all working out okay. I'm doing something a little different today. Welcome back to the Forex Market Preview, by the way. This is the first FMP of 2016. And who's calling me now? Oh, I can't take that call. And so what we've decided to do is I've got some new technology here this year, and I'm trying some stuff out today. And one of the things that I wanted to try out was I wanted to see if I could stream live. I normally record these videos at about the same time every single day, or every week, excuse me. And I thought this might be a good time for me to try doing some live streaming. And I thought it might be interesting to maybe open it up for questions sometimes and give you guys a chance to tune in every day as I record it and walk through. And you guys can see kind of more of a live feel for it. I don't know if it'll be valuable or not, but I thought we would give it a try. And something's not keyframing correctly. Well, it doesn't matter. We're just going to go ahead with it. And I'll end the streaming broadcast here, and I'll play with that a little bit later. But at least we'll have the recording here that we can play with. And I'll shut off the stream, so hopefully that'll free up a little bit of bandwidth here, and we can move forward. But I thought today, what I would try and do is I would try and give you guys a little bit of insight into how you can best prepare for this coming year. And we'll take a look at some charts. But I was listening to a lesson today. Actually, I was having a conversation. It wasn't so much a lesson. I was having a conversation with someone, and they said, you know, there's a reason that they make rear view mirrors that are a fraction of the size of the front windshield. He said, what's going on in front of you is far more important than what has come behind you. And that is never more true than when we start a new trading year. We happen to have, many of you have decided to join me for the next 12 months and be part of my war room, be part of my syndicate group. You saw the incredible power and the benefit of going back in time and seeing a whole year and being able to live that year with us. And many of you have taken me up and have decided to join me for this year in 2016. And one of the things that he was saying, and it's never more apparent, I guess, this windshield analogy than when we step into trading at the beginning of a new year. You see, it doesn't matter what happened last year. It makes no difference whether you had a good year or a bad year. It's January. There's nothing about yesterday that you can change. Yesterday is done. It's finished. It's complete. All that you have left is tomorrow. And what we want to make sure of is that when we go out to tomorrow, let me check on one thing here. Make sure this is okay. When we go out to tomorrow, we need to make sure that we're doing all of the things right that we're supposed to be doing. And so I'm thinking about over the course of the next couple of days, how can I best put that together? And I think one of the things I would like to do for those of you who are syndicate members is to help you out by maybe taking 20 or 30 minutes, holding a private session for you guys, and just talking through, okay, these are the steps. These are the things that I want you to make sure that you have in order before you start trading live. And if you're not at a place where you can have those things in order to trade live, then here's your responsibility in terms of preparing yourself, in terms of putting yourself in a place where you can be profitable, where you do stand a good chance of being able to be successful as a currency trader. Because if you are, and frankly, any kind of trader, currency trading is what we do here, but it's applicable anywhere. Because if you haven't taken those steps, I'm sorry to tell you guys, but the likelihood of you being successful is almost zero. There's just too much competition. There's too many people out there who are really, 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 really good at what they do. And there are too many people who can take advantage of someone who has so little discipline that they can't do some very basic things to put themselves in a position to be profitable. And so over the course of the next couple of days, I will put something together and we'll set up a time for those of you who are part of the syndicate. And if you're not, you're welcome to join. We'll put that link out to you guys in the bottom of this video. And I'm going to talk to you and kind of put out some bullet points of what I think you all need to be working on. And we'll break it up into those of you who are preparing in demo accounts to be able to trade live one day, and those of you who are preparing to trade live. And because there are really two sets of things that you need to be able to do and you need to be focusing on as you move into live capital trading. And so we'll cover some of that. But let's take a look here at some of the different trading opportunities. And I just kind of want to give you guys this week an overview of what's happened over the last year. So if you look all the way back here to 2014, you saw just for the last all of 2014 into so 2015 started right here on this candle. So huge bearish move, boom. Half of 2015 becomes bearish, and then this is the euro dollar, and then right about the March of 2015, we start to hit a little bit of chop, and we get a little retracement, and this is to be expected. We expect to have a little bit of chop. After this type of downward move, we're on a weekly chart here, we would expect to see a little bit of retracement, a little bit of consolidation in here. But this has been the euro's case for basically the entirety of 2015 is consolidation. Now, this is on a very large time frame. So if we drop down to, say, a 60-minute time frame or a 15-minute time frame, you would see a massive expansion and contraction. But over the course of a weekly time frame, so looking at it really in the viewing it as a year in its entirety, we had a sideways year on the euro. And the question now becomes, are we going to return to bearish trend, or are we going to break out and see a move higher? Well, the only way for us to know that, the only way, is for us to take a look at closes in the market. So I'm going to draw in a couple of lines here. Okay. And this is a wide variation. We go from $1.14 down to $1.05, basically, is the trading range that we have been in on the weekly time frame to denote potential breakouts for trend continuation or potential reversals. And there's a lot of different ways that we can play this, but basically what you're waiting to have happen, you have to assume that the market is in consolidation until we either close above 114.35s or we close below 104.84s. Now, gang, this would be true if we drop down to an hourly time frame or a 5-minute time frame. It doesn't matter. Looking at structure is the same on a weekly time frame as it is on a 5-minute time frame. The markets look exactly the same. And one of the things that I find so interesting is if I don't tell you what time frame you're on or what time frame we're looking at, you normally can't tell. This could very easily be an hourly time frame, not a weekly. If I drop down here to the daily time frame, you can see just how consolidated this market has been since March of 2015, right there. We've just been in back and forth, back and forth. We had a breakout here, a retracement back down into structure. Market rallied back up, almost retested the highs, not quite, back down into previous structure support. Then we rally, we get a break of structure, looks like we're going to get a breakout, but then the market never gives us any follow through, and we finally break, looking left for structure, here and here, we break to the downside. And now we're back into this unstructured consolidation down on the daily time frame. And so it doesn't matter what time frame we're trading on, all the analysis is going to be the same that you do. Is the market bullish or bearish? And what is the underlying trend? We chunk over to the pound. You can see pound, strong bearish move, nice strong rally. Now we're moving back down into potential trend continuation. What will we need to see in order for that to be true? Well, we're going to need to see a close below this level here at 146.24s. Again, this is on the weekly time frame. Now, we can get more specific in here. We can look at all the little moves in here, and we can say, okay, there's the low, and then we rallied up here, then we pulled back a little bit, then we came back up, then we pulled back, traded sideways, then we broke down to the downside, violating this structure level here. We rallied back up. Where did we rally back up to? Look left, structure leaves clues, previous structure support becomes resistance. Then we rally, Then we rally down and we put in another new structure low, violating the lows here, right? Then we rally back up. Where do we rally back up to? Look left, structure leaves clues, back up into previous support equals resistance. Then we came down, we retested this level here. We rally back up. Where do we rally back up to? Into the resistance zone. Then the market breaks to the downside. What are the two options here? What could possibly happen here on pound dollar weekly? Well, we could continue down and into previous support, and we would look for a support level for a potential trading opportunity. We could rally right back up into previous structure support, which should become resistance, in which case we would have potential selling opportunity. Now let me clean all this off. Remove all drawing tools. Oops, there we go. Now let's drop down to an hourly time frame. And let's take a look at what's happening here. So most recently, we can see the market was in at a high, and we came down. Here, we actually had a gap down, but let's say the gap down is our kind of our support level here. Okay. And we rally back up. We don't quite make it back up into structure. Market puts in a lower high. Then we break to the downside. Lower low, lower close. Then the market rallies back up. Where do we rally back up into? Look left. Structure leaves clues. Rallied right back up into this previous structure level right there on that spike high. Then the market rolls over. Boom. Down we go. We rally back up. Lower high. Higher low. Get a little break out there, and then we move into this unstructured consolidation with the high side here, our low side back down here, and we just kind of start to stair-step our way up. Come back up in, we retest this resistance level again. Market falls off. We retest again there until finally, boom, market makes a new structure low. So what will we look for? Well, the first thing we need to do is need to look left and see if there's any structure, and we don't really have any structure on the hourly time frame. We would need to go up to a daily time frame to look for that. And in that case, we're really sitting kind of at a structure level here, and inside structure level. The next level that we might watch out for here is this support level here. So we got a ways to go on that. If I consolidate this up, you can see it all the way down here. But what's another option? Well, the other option is that potentially the market rallies back up. And we see a move back up into previous structure support, which should become resistance. And if we do get into that zone, we've got a potential trade setup. So just to give you an idea that it doesn't really matter what particular trading time frame you're on. Back on the weekly now, Aussie dollar. Same thing, very bearish move. Now we've had a little ascending channel here. And the question is, do we rally back up into previous structure support? Or do we break to the downside and violate structure the other direction? Only time will tell. But this is what you need to be looking at, and you need to understand on your time frames where each individual pair is trading. Look at how bearish we've been. We've been bearish basically from, really the last bearish move started in 2013. And ever since then, it's been bearish move after bearish move. We would need to violate, in order for us to see a potential shift in trend on Aussie dollar, we would need to see a break above, close above 81.61s. That's a pretty big stinking move for us to be, for this to even be considered potentially a reversal. And so it's very interesting to note that on these larger time frames, just how bearish they are. So one might take, and this is just an idea, this is something that we work on with when we develop our trading plan, is what one may decide to do is they may say, you know what, Jason, I've decided that I'm going to look at my weekly time frame. And whatever my weekly time frame tells me, I'm only going to take trades in the direction of that trend, because I know the biggest money is going to be made by sticking with the underlying trend, or that's at least my theory on my trading plan. And we say, okay, well, let's go and test that and let's see what happens. Let's test every single trade, and then let's test only trades in the direction of the underlying trend. So if your weekly time frame is the time frame that you use for your trend follow or to determine trend, you would say, well, most certainly since 2013, we have been bearish. I may even take right here at around January, February, March, June of 2013 and say that was when we violated structure, so that's when I'm going to start testing, and I'm going to back test two different styles. If this is my trading time frame or my higher time frame, my time I determine trend, maybe the hourly time frame is the time that I actually trade on. And I'm going to trade both ways, and I'm going to record every trade. I'm going to record trades that were with the trend and those that were against the trend. And I'm going to test everything from 2013 to present. And at the end of that, I'm going to be able to tell, did I make more money or less money by trading only with the trend versus trading every trade that fit my trading plan. So that's just one idea of a way that you can start to use some of your knowledge of trend and what's happening with trend to determine how you're going to trade. Now, of course, I could tell you what the likely outcome is after you do all that testing, but I'm not going to do that. Number one, because I could be wrong. And number two, because I want you to go and actually do the testing yourself. And unfortunately, if I tell you the answer, you're not going to want to go do it. It's much easier to have somebody tell you what the right answer is than for you to actually go out and do it and perform the skill and to do the work. But the work is incredibly important. Let's look down here. We've got a potential trade set up here. Again, very bearish here, New Zealand dollar on the weekly chart, but we've got a potential Fibonacci inversion trade here. So if this market rallies up into 71.87s, you can look for a shorting opportunity. Why? Because look left. Here's the previous structure level. Okay? So if we're looking for, and this is basically looking for an overextension of this move, and I don't know if that does not look like it's a pattern formation, but let me just double check it. Now we don't hit the 50%. So no pattern formation trade here or advanced pattern formation setup here, but if we get up into that 1618 extension near that structure level, that's going to be a pretty good place to look to short. Again, in the direction of this big move, but it's basically playing a false breakout here. It's called a Fibonacci inversion trade. It's something that I don't know if I invented it, but it's something that I teach and that I use, and I haven't ever encountered anyone who uses this particular trading strategy, so I claim it as my own unless somebody tells me otherwise. 71.87 is looking for a bearish move there. The rest of this stuff, again, I don't want to get too deep in the hawk. We're already 21 minutes into this video. I just wanted to impart upon you the importance of having a plan, of understanding some basic concepts of what it means to be a trader. You know, that a trader is not going out and taking trades. That's not what you get paid for as a trader. What you're paid for as a trader is good judgment and discipline. Those are the two things. Now, how are you disciplined? Well, the only way you're disciplined is because you have a plan and you follow that plan every single day. If you don't follow the plan, then you can't be disciplined. If you don't have a plan, then you can't be disciplined by definition. You have to have something to be disciplined to. How do you develop a plan? Well, it's a long and arduous process. There are ways that we've shortcutted it. We actually give you trading strategies. We say, hey, you don't have to go invent your own. Here is one that works. Go test it. Make sure. Confirm it for yourself, and then trade it. That's what we do with trend continuation trading. It's what we do with CTS trading. It's what we do with advanced pattern recognition. Here is the template. Go and follow it. Success is yours. Some people are able to follow it. Some people aren't. What it ultimately comes down to is discipline. Have you done the things that I tell you to do? And it always amazes me because people will come and they will spend thousands of dollars to go through one of our training courses. And they won't ever go through all the videos. Now, the reason I know this is because we can see that. I can see who's logged in, who's watched what videos, how often they logged in, what videos they watched, even in some cases, how much of a particular video they watched. It's one of the ways that we are able to track how well people are consuming the information that we're giving them. And so when a guy comes back to us and he says, well, this just didn't work for me, and I don't really know, it didn't really happen, and I don't know why, and things just still seem broken, and I don't really feel like it's working. I go back and I see, well, you only went through 3 or 4 videos in the entire course. You only completed a handful of the content that we put out there. You only downloaded 2 of the documents that I put out. And I'm guessing if you didn't even watch the videos, that you probably didn't do the back testing or write the trading plan either. Isn't that true? And he says, well, yeah, that's true. That's true. And I say, well, listen, man, the only way you get from A to B is if you follow the steps. And I can put the roadmap out. I can put the little breadcrumbs that lead to where you want to go. But you actually have to get up off your tail and pick up the breadcrumbs and do the work of walking from here to there. If you're unwilling to do that, or if that's how lazy you are, as you know from the jump that that's not going to be something you're going to be able to do, then don't get involved in this business. There are going to be no shortage of people who will tell you that there's an easy way to do it. But very few people will tell you the hard truth. And that hard truth is that while I can give you tools, I can give you trading strategies, I can give you money management systems, I can teach you ways to get a handle on your discipline, I can do all of those things and provide you those tools and the training. Ultimately, what separates winners from losers is the ability to follow a plan consistently. That's what we talked about all last year in the syndicate. Your ability to follow that plan consistently. Everything else that we do is wrapped around getting you to do that one thing. Because if you can follow a plan that has a statistical probability of being successful, meaning if you trade it enough, you'll make money. If you can follow a plan that has a statistical probability of being correct, it is very hard to lose in the long run. Might have short weeks, might have days when you don't make money, might have months when you don't make money. But over the long run, and this is what all of last year was about, was showing you that in real time. In the long run, you can make money. If you don't have that discipline, if you can't do it every single day, if you can't come into the market when everything is going wrong, when your life sucks, when you haven't made money in 2 months, and you can still take that next trade because that's what your plan says to do, if you can't do that, there's no hope for you. None. So as you move into 2016, how do you make 2016 the best trading year that you've ever had? Well, the very first thing that you need to do is you need to ask yourself, do I have a plan? Can't be disciplined without the plan. If the answer to that question is no, then stop trading immediately, right now, and start working on your plan. If you have a plan, ask yourself the question, have I tested the plan? Do I know that the plan produces me a profit over time? Do I have a reasonable expectation that if I do the same thing over and over again for the next 12 months, that I'm going to have more money in my pocket than when I started with? If the answer to that question is no, then stop trading immediately. And then last but not least, if you don't have the capital to trade, if you are coming into the market and you are trading money that you cannot afford to lose, stop trading immediately. I cannot count how many men I know who had a decent plan, who tested it and knew that it worked, but when they went into the market with real capital, they were going for broke. They were trading with money that they couldn't afford to lose. They were trading scared. And it's amazing the types of things that happen to your mind when you start trading with real capital. All the funny things that you think you see, all the wild and crazy notions that you get when real money is on the line and you're seeing your account balance increase in value rapidly or decrease just as fast, usually more fast. You have to be trading with money that you can afford to lose. Eventually you'll get to a place where you can trade with money that you can't afford to lose, right? If you're trading multi-millions of dollars for other people, you can't afford to lose all that money. That would be a very, very bad thing. But in the beginning, we only want to put capital at risk that we're comfortable losing. I can give you a setup where you virtually don't ever have to worry about losing everything, or where it would become almost a statistical impossibility to lose everything. But still got to be prepared. Still don't want to put ourselves in a position where we're trading with capital that we need to pay our rent, or that we need to put our kids through school, or to give Susie the braces that she needs, or buy mama that new pair of shoes, whatever it is. We want to make sure that we have a plan, that we've tested it, we've verified that it's good, that we know it's repeatable, and that we're trading with capital that we can afford to lose. You do all three of those things, guys, you're going to be in really good shape. If you don't, you've got some work to do. And like I said, you're welcome to join me in the syndicate. I can't even count how many people took me up for the yearly membership and just said, you know what? I'm going to commit to a year. I'm going to show up every day with Jason, and I'm going to work with him the way the guys did last year in 2015 and see if I can't correct some of the problems that I've been having. And I'll do everything I can to help you. But guys, I want so badly for this to be the year that things change for you. I'm going to give you everything I got for the next 12 months. And if you're willing to come alongside me, I'm going to do everything I can to make sure that you're successful and you're profitable. But it will be up to you to do the work. Have a wonderful year. I'll be back next week. Until then, good luck, good trading. I'll talk to you then.